Assalamu Alaikum everyone, welcome back to another video. I hope you're having a great day. Right, so lately a lot of you have been asking me, what tools I'm using in terms to do all the research that I do all the time. You've seen me use that spreadsheet to put together all of that. I actually use loads of different websites and kind of combine them. Some are basically you have to pay for, some are you don't have to pay. So I'm just going to do a very quick video using Microsoft as an example, like what the things that I'm looking for or where to find them, okay? And I'll tell you the ones that you have to pay for and the ones that you don't have to pay for. What you see right now, this website is my brokerage account. That's Trading 212. Some of you have asked me before. It's similar to M1 in finance in the US. We don't have M1 finance in the UK, so we use this Trading 212. I also use Freetrade, which is basically another company that I use. So those are the two brokerages that I use right now. Sometimes I do research using just Google. So I just type Microsoft or the company name or whatever, and then you can see the graph, you can see a little bit of information, you can see the news. So there's a lot of information in there. If you go to Google's as well, it has its own platform where you can actually find a bit more information about the business, the financial side of things and how they're doing. All of that is free. You don't have to pay for that. The next website I use is Finviz, which is basically another website. It's got a screener section where you can actually look for specific companies that basically have paid dividends. So like 3%, it automatically changes. If you're looking for different sectors, for example, industrials, it's really useful to have, okay? Sometimes I just use this just to kind of show you what the stocks are doing, how the stocks are doing for that day. Again, it's a free tool. I don't have to pay. That's it. The next one is Yahoo Finance. And Yahoo Finance, again, is a free product. They have a subscription section, but I don't actually bother with that. So in terms of the market cap, there's the market cap there. There's the beta. There's the PE. There's the EPS. There's the dividends. Okay, so that's the forward dividend. Okay, you can see the market. You can also see the 1 year target estimate of $368 for Microsoft. So that's basically what they expect it to be by the end of the year. Now, that is basically just a general overview. The next part I'll use is the financials. The financials are really important because this is where you can see the income statement, the balance sheet, and the cash flow and so on. Okay, it has a little pop-ups, which is very annoying, but I just try to get rid of them as much as I can. Right, total revenue, you can see in the last 5 years, it's heading in the right direction. It's growing. It's absolutely fine. You can see the cost of that revenue and then basically how much of that it's actually gross profit. Gross profit is obviously before all these taxes. So after they paid all of these taxes and these operating incomes and all income or loss, interest expenses and all that stuff, the net income is what you're after. So in 2018, Microsoft had about $18.5 billion in net income. Right now, we're looking at about $71 billion, from 16.5 to $71 billion. That's the kind of company that you want to invest in. Then you go to the balance sheet. And then in here, what you're looking for is, so if I make this smaller, I just need the current ratios. Okay, so current assets right now is basically the next 12 months. So basically, this is what they have for currently in order to pay off their liabilities. And I'll show you that. Right, so that's the current ratio. That is the current liabilities. Okay, so if I open this up, you will see the current liabilities there. Okay, so that current liability against that current ratio. So you've got $184 billion and they only have to pay $88 billion. So in the next 12 months, you don't have to worry about the business. Then you can look at the total assets they have against the total liability. Total liability is only $191 billion against the $333 billion. Now, that's a lot of money. Then we look at cash flow here. Okay, the cash flow, the bit I'm really interested in. There's a lot of things that I look at normally, whatever, but the most important one is for me the one that's highlighted at the bottom. Okay, that's the free cash flow here. Okay, $60 billion. That's the one that I'm interested. Okay, that is the money that the company will use to pay off debt, to buy new companies, to invest in research and development, all of that amazing stuff. The next section I'll look at is the analyst section. Okay, And the analysis section, basically the analysis section is actually gives us an opportunity to see what they expect in the next 5 years. Again, this is expectation, this is estimate, remember that, okay? So that's what they expect. The company could do worse, and if that happens, basically what happened to Netflix in the last couple of days will happen to this type of business, okay? So once I've done that, I can also look at things like the sales growth, okay, 2022 against 2023 and what they've already done and so on. And then 2022, they're expecting about 18.4. The next year it's going to decline a little bit and so on. And then I'm going to look at this statistics section. Here, what I'm looking for is the profitability section. So profit margins, and I'm also looking for return on equity. Some people also like to see the operating margins. The other things you can look at here is quarterly revenue growth. Okay, you can look at quarterly earnings growth again. Then you can look at the debt side of things. Current ratio above 2. Okay, that's it. You're done with then Yahoo Finance. So we've looked at everything we need from Yahoo Finance. The next one I look at is Morningstar. This is paid, okay, and this is the problem. So I pay every single month. I don't know, about £29 or $29, whatever. Sorry about that. And that gives me a lot of information. I can even find some of the stuff that I found in here, but it's like a little bit fiddly. So I like Yahoo Finance, it's easy to find. So 19% discounted at the moment. It has a wide mode. It has the basic capital allocation exemplary. So I can click this. It can actually give you more information on what that means and how it works and all that stuff. The 5 stars, the economic mode and the fair values and all that. So because this is paid, there are other companies obviously that are used to find valuations. But this one is also paid, but you can actually register with with an email, and then you get I think they give you 5 stocks to look at every single month or something like that. So Simply Wall Street, that's what it's called. I'll put the links on all this in the description section so you can have a look at that. So Microsoft, for example, if I go to the top, okay, it gives me this little thing here. You got the value, the future, the past, and everything looks kind of green. And then it gives you a little overview of everything. So valuation right now is this, okay? According to them, that's the price target. Future growth, they're thinking about 12%. I think Yahoo Finance has said about 14% or whatever it was. You can look at the past performance, how it did in the last couple of years, okay? You can add things like the free cash flow to see how the business is performing, the cash operations, the operating expenses. You can look at the financial side of things. They have more assets than liabilities. You can look at the dividend in comparison to the market. So the top market pays about 3.7. Okay, the bottom market pays 1.4. And then there's the company itself. You can look at the management, how long they've been, who is in that business, ownership. Okay, this is really good. So you want to see if people are buying their stocks or selling. As you can see here, recently the insiders are actually selling Microsoft. So February, someone was selling December and so on. Maybe they think it's overvalued. Okay, even basically the CEO of the business is selling it right now. This is interesting. Okay, so when you look at some of this and you are thinking about the short term, okay, then you might think, why are they selling it? Let me take some profit off the table, maybe buy it back later on. But if you're a long-term investor like myself, I don't care about this. Although it kind of indicates whether the company stock is overvalued and undervalued, blah, blah, blah. Basically, what I'm interested in is what's going to happen to this business the next 10 years. So this is the next one. The final one I want to show you is TipRank. So let me quickly type MSFT. Okay. Again, this one, I only use the free section. They have a paid section as well. It kind of gives you whether it's a strong buy, how many analysts are basically saying it's a buy, how many are hold, how many are sell. That's the reason why it's all buy, because 25 of the people have said it's actually a buy right now. You've got $373 per target price. But remember, this is based on the 12 months, okay? And then 33% upside. You can look at who the analysts are, okay? So there's loads of them are looking at this company because obviously being one of the biggest company in the world, almost everybody's interested. And everybody here said it's a buy. And everybody here has a buy price that is higher than where it is currently. So it's basically, you can use this type of information. I think they also have a little bit more information on the earnings, the dividends, and all of that information. Everything I've shown you now is basically what I do every day. So it takes a lot of time to actually put the videos and put into all of that into one spreadsheet. So I really appreciate if you could just give the videos a like, because it takes a lot of time to put these things together. Now, the final thing I want to talk about is a simply dividend, save dividend. This is a website, again, you have to pay for it, but you can subscribe to them, or you can just sign up to see what it's like, and then if you like it, you can actually purchase. Quite expensive, but hey, if you're interested, have a look at that. Microsoft, dividend yield, dividend safety, dividend growth, okay, and then you can get information like the market cap, all of that stuff. But the good part is, for me, is the dividend safety, as well as you can find information, things like the payout ratio, the 5-year growth rate. What else can you see? So you can see basically the annual dividend per share. So in 2002, where it was, to right now where it is, which is quite good. How many years they've been paying this, how many years have that been uninterrupted, and currently how much they pay. Then you can look at other things, dividend yield, forward PE ratios, and then you've got the financials in graph mode. They tell you what the earnings per share, payout ratio should be, and all of that stuff. So you've got a lot of information in there. Shares outstanding, again, something that we always should look at. Okay, it's declining, it's actually heading downwards, which is good. The more the companies buys back their shares, the more you own shares will be worth, basically. Okay, and then you've got the EBITDAs and the net debt to capital. You've got so much information in here. The final one I want to show you is called Seeking Alpha. Okay, and Seeking Alpha is, let me show you, MSFT. So you can find some of the information you found here in Seeking Alpha as well. Okay, so if you go to dividends, okay, you can find all of that information in there. Yeah, there's so many different websites that I use to find the information that I'm looking for, and I pick basically based on my spreadsheet, the things, the metrics that I picked, I can then look at those in different websites. The only one that you really would have to pay for is Morningstar, because they don't give anything for free. These guys, very frugal. But a lot of these websites that you see in other places actually use Morningstar to get their information from. I hope you enjoyed that video, and I hope it was helpful. Okay, if it was, please give it a like. Trading 212, apparently they're not taking new customers basically in England right now, but in the UK, but other places they are. So if you like it, basically to open up an account, you live in European countries, have a look at the description section. You might find a link there. You get a free share, I'll get a free share. Happy days. I hope you enjoyed the video. Have a wonderful day. Assalamu Alaikum.